Hey everyone, Andy here from Luminary Wealth. If you're a business owner, you certainly feel the economic impact of this virus, for better or for worse. But the CARES Act has come out with several provisions that apply to small business owners in order to support them through this roller coaster of 2020. Now, the situation and application of this bill is continually evolving. But here's an overview of some of those provisions. The first one is the one that I'm sure everybody has heard of, the Paycheck Protection Program. And this is designed to help employers cover some payroll costs, along with some other expenses, encourage employee retention through the next few months. And this loan is potentially forgivable depending on when and how it's used, but you do have to apply at a local participating bank. Now, I understand this program has been off to a rough start, but hopefully as we move forward, we start to see some efficiencies and a more streamlined process to help better manage the volume. If you want to learn more, you can go to sba.gov. They have a whole page dedicated to this program. Second is the Economic Injury Disaster Loan. This is also a loan through the SBA, but the qualifications and the amount that you can get is going to be different than the Paycheck Protection Program. You may be able to receive an immediate $10,000 advance, and that will likely apply as an advance against the Paycheck Protection Program loan. But this one you can actually apply for online. So if you go to sba.gov, you'll see a link right on the front page to where you can apply for this. Third is the Employee Retention Credit, and this is a credit against employer payroll taxes equal to 50% of employee wages up to $10,000 per employee. Now, you can only use this if you have not utilized the Paycheck Protection Program, so you can't use both. Now, this will be in place through 2020. If you're interested in learning more, you can Google IRS Employee Retention Credit, and the first result is an IRS FAQ that answers a ton of questions on this. On a similar note, some companies may have the option to defer the remainder of 2020 employer payroll taxes through the end of 2021 and the end of 2022. So take what you would pay for the remainder of 2020 in payroll taxes, 50% can be deferred through 2021. The remaining 50% can be deferred through 2022. Again, this cannot be used if you've already utilized the Paycheck Protection Program. Now, these payroll tax provisions are great for businesses that for some reason didn't apply or didn't qualify for the Paycheck Protection Program. Finally, there were some modifications to the NOL rules, or net operating losses. So typically when a company incurs operating losses, they can only offset up to 80% of their taxable income. The remainder gets carried forward. Now, with this provision, the amount of taxable income that you can offset with operating losses has been increased from 80% to 100%. Beyond that, any operating losses that you incur in 2018, 2019, and 2020 can actually be carried back 5 years. So what that means is that some companies may be able to amend prior year tax returns, claim a refund, and be provided with more liquidity during these tough times. Well, I hope this was helpful and informative. And more importantly, I hope these provisions help your business get through these tough times. If you're interested in learning more, I'll post some links in the comments for more resources. In the meantime, stay healthy, stay hopeful, and hang in there.